Good afternoon. Today is Friday and it's April the 7th. Today is Good Friday, Easter Friday. And for those who are celebrating Easter and happy Easter. And today, most markets will be closed today. Obviously, U.S. market will not be open. However, the bond market in the U.S. is open for half a day until midnight our time. And today is also the non-farm payroll. The U.S. labor market data will be released at 8:30 p.m. So it's going to be pretty volatile. Unfortunately, the market is not open. But for those who are trading CFD, you may have an outlet to actually trade something out of the non-farm payroll. Now, anyway, let's recap. There's been very little incentive because it's a super long weekend, and most players has already exit the market, and the market condition in terms of liquidity is actually quite thin. So if you can avoid to not trade, do so, because in a very thin market, it is very susceptible to wild swings. Anyway, we take a look at the U.S. Dow Jones market. Dow Jones has been in consolidation for the last 48 hours since hitting a high at midweek at 33,635. So we can say that the market is basically still wanting to go up on the idea that the Federal Reserve will have no choice but to pause and perhaps even cut rates. I think we will have to see whether the Federal Reserve actually do that. Right now, we do not know whether the Federal Reserve is going to be very concerned with the banking crisis to the point whereby they do not dare to hike further, and that will be meaning that these people who bet against the Fed will be correct because they have been pushing equity prices basically higher. But we are beginning to see even more severe stress in the banking sector. We can see that these small regional banks that has been very active in the mortgage market is facing a lot of liquidity delinquencies in the customers, and if the high interest rate continues to be the feature, then there's a very good chance that they may actually be the next power cut. And they are also seeing a large desertion of their deposit base to the larger banks and even to the credit union, who actually park their money in the money market because the short-term end of the yield is actually risk-free. So that will be a situation in which the next crisis may actually explode out of nowhere. So be careful chasing this market ever higher. I'm a little bit skeptical about this rally here. But anyway, if you are prepared to go and long this market, somewhere between the midpoint of 31,805 to 33,635, the midpoint is at about 32,720. You can use this level here to actually consider looking for buying opportunity. But again, I'm saying I won't be doing that. I'm just saying that if you are keen, this could be one area to watch out. In the S&P 500, we have a rebound of 3,808 to a high of 4,133, and this unfold in a very neat three-wave, which is just short of my ideal target of 4,140. And this market is getting a little bit dicey for me because you can see the highs are getting lower, meaning to say that if this is the case, it does not really support a very bullish outlook. So if you are looking to buy, again, the midpoint between 3,909 to 4,133 is at a 4,020 level. So if you're looking to buy, this could be one area to look out for. Okay, over in the Nasdaq, we have seen higher highs, so this is actually supporting the bullish case in Nasdaq. And the tech stock has been on a tear this year, very different from what we saw last year, in which nobody wants tech stocks. Okay, so a Fed pivot actually will work out very, very well for the tech stocks, but we know that SBV has been decimated, and most of their customers are in the tech stocks, in the tech sector, in the startup. So the funding for tech startup has basically dried up. So that may not necessarily be a great condition to be in the tech stock area, because if you don't get funding, nothing get done in the tech sector. Okay, so this is something that you got to consider. But if you're looking to buy, again, the area, the low from 11,700 to 13,205 is could be see a market pullback 50%, and that level is 12,450. So if you're looking to buy, maybe that is the area to look out for. But like I say, I won't be looking into this area at all. Over in the Nikkei obviously do not celebrate Easter, and at least the market is open. The market is currently having a bit of a rebound from yesterday's low point, but again, trading has been very, very restrictive. There's hardly any big move, so maybe the Nikkei itself may actually continue to slide downwards from a high of 28,735 all the way to take down to 26,633, and maybe head towards 26,180 level. So this will be a three-wave pullback. So this is my outlook for this. Okay, over in Hang Seng, the market is closed because as a former British colony, Hong Kong actually observed Easter holiday, so we can see there's no update in the Hong Kong market. But by and large, the market is just short of my ideal target of 20,800 with a high of 20,722 on then okay, last week, and exactly a week ago. So this was a high. There was no new high this week itself. So this market is actually quite vulnerable. It has really completed a three-wave pullback, rebound, and if there's no surge to the upside beyond 2100, 21,000, I think the market is susceptible to the downside. Okay, in China, obviously China do not celebrate Easter, and the market is open today. We see the market pull up to a high of 4,131, and this appears to be soon going to be hit a pocket of prices which I think will be very difficult for you to clear, and the barrier to higher prices with 4,168, 67.5 thereabout. So unless a market close beyond this level, it is very hard to foresee this market continuing to go higher. Okay, over in the energy market, we can see crude oil after hitting a high of $81.75 on Tuesday. The market has been basically been in consolidation, and that gave me the idea that the market may actually pull back a little bit and ideally come down to the price range between $74.95 to $77.50. There will be a great area to actually pick up some long position. Like I mentioned in previous updates, I was actually short going into the weekend, last weekend I mean, and the market obviously did not work out. The market gaps out on the on news of a surprise production cut by OPEC plus. So I was stopped out on this position, and to make it worse, I was stopped out at the worst possible price, which is at the high, and I want to get back in again, but this time will be on the long side of the market because production cut is going to last all the way until the end of 2023. So this is going to be a shift in sentiment, so I want to be able to trade on the long side now. Over in the gold market, the triangle pattern that I mentioned since the week before is working out to be very, very nice. But unlike previous post-triangle trust, we have a bit of a correction going on right now from a high of $3,032.11. Typically in a post-triangle trust, there is hardly any retracement, but because we are moving into a long weekend, and it's only quite understandable that people who have long is taking profit, and maybe this is the sentiment behind why the market pulls back. And now if this is the case, I want to take advantage of this pullback. Ideally, price goes down into this bracket of prices between $1,991 to $2,070. Okay, and if this is the case, I want to buy more in anticipation for an extended rally in the early part of next week. Okay, I've already gone long at $1,960, so if I can buy some more at 2,000, I will do so because my target is way above $2,060. Technically, the market have a potential to go all the way to $20,000. Sorry, $2,069, but I'm going to be happy to get out at $2,060. Okay, so because after a post triangle trust, the characteristic of a triangle pattern is that it goes up as fast, it will also reverse just as fast. So I'm trying to avoid the pullback here by taking profit, and if you are long, you should also do the same. Over in the silver market, we see very little pullback. In fact, the pullback has been so shallow. Market is again testing the upper end of this range. The high traded this week is $25.14. That was on midweek itself. So it looks like it's preparing to actually extend higher. If the market pulls back at the very most, I think the market will probably try the $24. I think that is the most optimistic outlook. Okay, I think the market is basically quite long and nobody wants to get out. Okay, over in the dollar index, we see a bit of a rebound. Dollar index went out to as low 101.09, and that was on Wednesday. The market seems to be pulling back up, and it is likely to continue to trade to extend higher in a corrective rally. And in the market go down to 102.18, I think that's where I want to get out of my long position. I'm actually quite long on dollar index, unfortunately, so I'm prepared to get out of this long position from 102.18 levels, because I think the market eventually will go down below 101. So I will have to see what happens. In the currencies, sterling continuing to edge higher to a high of 125.25 this week, and it very much like what we saw in the dollar index. So currency is also doing a corrective pullback, and it has come back to this range of price, which I think will find buyers, and so it did. The 124 even to 124.30 levels is my bracket of prices to actually expect the re-emergence of buying interest. Market went up to a low of 124.13 and then basically halted its decline, and I think it's getting ready to power higher. Same thing is in the euro dollar. Okay, euro dollar have a high of 109.73 this week on Tuesday, which is one day before the dollar index actually bottoms out. So we can see prices pulls back into this bracket of prices between 108.80 to 109. So the low traded so far on yesterday was 108.85. So the market looks like it's preparing to edge higher after this. There's very little interest in the Aussie as far as I'm concerned. The market went up, did not quite hit my target price of 0.6820 and has been falling since. And I think the downside is quite limited. I think it's probably going to be somewhere around a 0.6565 area. So there is really no incentive to get into Aussie dollars. However, the same cannot be said on the dollar versus the yen. I'm actually very keen to take up additional short position in the dollar yen trade. I'm actually short the dollar yen just under 133.70, and the rebound from 130.63 may give me another chance to sell somewhere between 132.20 to 132.50 levels. So if the market goes into this bracket of prices, I am already prepared to take up another short position, because I do not believe 129.60 is going to hold. In fact, my target is somewhere around 125.50. So I have a bit of a downside projection which I want to take advantage of. Over in the dollar Canadian, very little, very much what we see, like in the dollar index, we have a very what I call it, controlled rebound, and the prices has gone into the bracket of prices which I think may attract selling interest. This bracket is 135 even to 135.60. Market have a high of 135.06. That is on yesterday, and anytime now in the market take out the bottom of this rising channel, it will extend lower. But I think the target somewhere is around 132.75. So again, depending on your risk reward, I think this is all that you can do. Okay, and in the Bitcoin itself, Bitcoin basically has no heartbeat. Okay, it has been like this for more than 2 weeks now. Ever since it ran to a high of 29,380, the market has been controlled between this high level and the low end at $26,330. So in between, the market has been doing sideways, and it is continuing into the weekend itself. I think this is all you can do. However, the good news is that the market, ever since its rally, has been without seeing any major profit taking. So that may actually underpin this market here. So the market can drift down to the region between 25,660 to $26,330. I think that would be a great area to pick up some more Bitcoin. However, if the market do break to 25,600 levels, the next level to actually add more position to the long is $23,000 to $24,000. Okay, that's all I have for you. And for those who are celebrating Easter, happy Easter, and I shall see you next week. Bye-bye.